There, yeah. So when so when a member of PPT who uses a lot of different groups is working with Crypto Banner, they were basically saying, you know, uh, wait for it to buy at a band that was even lower than this, I think, right? And the idea was that I was basically saying, hey, this is an automatic fade for me if it comes into this. Back in the day when I was a clip fanatic for everyone, I would sit here for everyone. I don't even think anyone cared, but I got carpal tunnel with it, so I'm done. I would just, okay, this is my major zone, and I would just sit here all day and I'd make it bold, and I'd even color code it, and I'd say, this is a bull bear. You have to take it here. And this is like good psychologically for people. But what they were saying was, what if this, he kept saying, what if this breaks? I'm like, well, who cares, man? That's why we have a stop, which I set for him somewhere. I can't remember. It was like around here. But at the same time, the market was like, I guess around here, right? And this was a day, and I was just like, hey, I don't see an edge here. I'm not, I didn't short up here. I was sleeping. I'm not going long and getting stopped out for some shoot. This is not good. So even if I have a zone, that doesn't mean I have to take it. But I even said in the channel, hey guys, it's at initial support, but I think I said something, I'm still not going to take whatever. But if you did, like we were just, maybe it was something I was talking about. But as this was happening, somehow I got to saying, well, the real correct process would be, and I got rid of this for him, uh, you know, right around here, we're building a double bottom. We don't just take any double bottom, but it is a double bottom, a very small one. A double bottom is a minimum of two. This is a 15-minute chart. Each of these candlesticks is 15 minutes. You have to have at least two to be the most aggressive double bottom. However, you see how this is so tiny visually? I was saying, hey, if it comes here, I'm definitely taking it. But he was just so jonesing, and I was like, my hunch was that it probably wasn't going to get here tomorrow, and that it was going to hold here and go up. That was just what the hunch basically is that, well, I'm at yesterday's lows. So if I'm at yesterday's lows, then it's a possibility that it could hold. Now, were we at the absolute lows? I had this actually zone drawn different because yesterday, the day before, or whatever, because we held here almost like an inverse head and shoulder little pattern. But you know, so I said, okay, well, we'll take a 0.5% here. It made sense. Okay, so we had our stop. I think it was around whatever it was. We said it on the video, and I time stamped it, but it was enough where this didn't stop him out when it pushed back through down to the zone. He was so aggressive to get in that I was like, dude, wait to the bottom of the zone at the very least, right? He's not on the call. I don't care if he is. It's the truth. You can watch the call. He's like, no, we got to get up here. So he got in at 6,900. So I said, okay, here's the rule, and you make the decision. If you're really jonesing, you can get into the very top to the middle, right? Somewhere in here, even a little few ticks ahead. And if you're kind of like on a day where it's shitty, like I would be like, okay, well, I have to get good trade location because I don't have any other super edge, right? Like I'm not down here where it's a super sharp buying tail where the last time we were here, the buyers went boop. You know what I mean? They just bought it right up. This is just some crappy stuff. But it was enough where he was like, he wanted some Action Jackson. So it's like, well, we had a 0.5% back, and he almost got stopped out because he got bad trade location. The rule was because he didn't have much, he should have went back here. You can get aggressive at the top of the zones when it's orange, aka when you're at a bull bear, a major zone. This was a major zone, actually, not just a bull bear, because I showed you on the daily how if we zoom out, this is actually touch points from early March. So like you without question, if you're want to go long and you're in the bottom of a multi-month trading range, you just take it, right? And the cool part about this one is that if we do retest here, we have a nice visual of it. But because this was so strong, this was actually valid too. Like this would be the first double bottom I told him on video that I would be okay getting stopped. I always think like what it's like getting stopped out. That's how I think. And that's what gets me in, which is actually the opposite of what you should do as a positive person in life and how I am in person. But because it's a counterintuitive environment and everything's really scary, I don't think about things working out. I'm like, okay, I can handle losing. This is easy to lose because it's a small. I'm like, the problem would be is if you bet so big here that by the time you're supposed to take it here, like you could have skipped this one, that's fine. You can't skip this one, and that's rules in your sheets, right? That you're so psychologically or emotionally down that you skip this one, right? So, but he bet small enough or whatever where he didn't get stopped out here, right? We had a 0.5% take. It was like somewhere here, like enough past here. And now hopefully and we talked about it. We talked about where to set. He can't set a quad exit like I can for cryptocurrency because he doesn't have that bot. So I basically taught him how to do it, how I do for the S&Ps, where I just manually do a quad exit by going to market. So I said, okay, well, if it comes back up into this orange dot, you could take half off. That's what I do because I just like to get my risk off and I'm stressed out. But technically, the first target is up here, and it did get there. So he could have took half off here. The last he got back to me, he said, "Should I take off now?" And I said, "Yes, now." And I kept basically the signals in the channel he wasn't even viewing, but I gave it to him anyway. So hopefully he took off half here, and then the other target we set ahead of time was right here. So he should have two targets off, and his runner is at 72,000, like way up here. The part we don't care about. And he's like, "Wow, Matt, if that runner hits, that's a 30-to-1 reward to risk." I'm like, exactly. That's what we want. Very small risk for a huge reward. Whereas, a DCA guy wants a huge reward because that son of a gun is willing to take a giant risk. And I'm not saying I don't play that game too. I take profits and I put it into a portfolio, but I tolerate psychologically a lot more on a portfolio than I would on, a staking on a trading account. So like this one, we're like a 0.5% here. And I think this one, if you got stopped out on this one, that would be 1.5. So I'm thinking, okay, that's only 2%. You're okay losing 2%. That's fine on this idea. What I'm not okay with is on this income producing trade is if you didn't use a stop loss here and he didn't use a stop loss here and he went here and then it went down and then it went up and he's like, see, it went up. I can break rules. That's see, Matt. And then like maybe my system, I got stopped out and I'm supposed to be okay. That's the right process, even though it feels like shit. He broke a rule on that one and he got away with it. I'm just giving you an example. And now he's going to do that over and over again. And I'm saying you can't do that because eventually you will become a huddler for your income producing trade. So you have to really know what you're doing with what capital. He's 100% focused on this is a trading account. So he's not like huddling. What he does that I don't really like is he wants me to look at copper. He's going to go to bed at 10:15. Oh yeah, I'm sorry, I didn't see that. Yes, I'll look at that. He uses leverage. We'll talk about that in a second. What's the ticker for copper? I'll look at the daily. Matt just joined. He's new. Matt's super serious about trading. He is super wants to 100% learn. He actually paid up for the whole year, so he's down to learn. He's on the call for the first time. So I like that. We want people who are dedicated on the call. Yeah, Razi, if you give me that ticker, man, I'll hook you up. But I don't know if you can hear me. Or that's George. George left. Sorry, that wasn't Orazio. George wrote that.
No, I'm still there.
Oh, you're still. Who wrote the guy? Who wrote something about? Can you check the chart for copper because I'm going to bed at 10:15? Is that you? That was George.
George.
Oh, he left. I didn't see that. I feel bad now. Shit. Oh well. If someone could text him the channel, say, "Hey, Matt, just saw that. Come on back." I think he's in Germany. I don't know where he's at. But yeah, just going back. Let me just go back to the. But see, for the day or the income producing strategy, the psychology is that small losses equal trading success. So that's why sometimes in this doing the right thing, which can get you stopped out, it's always got to be what's going to make you money in the long run. Breaking that rule where you ran your stop twice and then you wake up because you're in a bull market and it still happens to be go up is great. But most of the time you're going to be huddling for months and months, if years, if you do it in the wrong season. So we can't do that, right? And even with our DCA strategy, we have rules for that too. It has to be at major turning points. We can't go all in, right? It has to be an amount we can afford to lose or some profits from an income producing trade, things like that. Like you can hip pocket runners. Like for example, if this is, I don't know if this will happen, but let's just say this runner that he has super high at 72,000, let's just say it gets to, I'm not saying this is low, but let's say it gets to that, he might just say, you know what, I don't care about this. I'm going to let that one run. I'm going to take that off and just put it on the ledger. And that could be, that's a way to hip pocket it. It's something he doesn't care about. Now, I'm not sure exactly if he did take off half or whatnot. He said usually what he's been doing is he's going all in and all out. So once again, because he doesn't really know how to do that, it's been he might have gone all in all. I'm not sure, which is fine. This was, you know, if you look at what he risked less than so. If he got in at 6,900, and he risked 0.5%, that's less. So 1%, if we'd be moving that 60,992, which you can see would be right here at the price level that I have, would be two decimal places to the right. So he risked less than 600 and something points, and he would have got, let's just say he just conservatively went all out here. You know, he got in at 69, 71, 6. So he went up like over 1,000 points or close to 1,000, and he risked less than 600. So he got like 2 to 1. Like that was pretty good. You know what I mean? He, you know, it would have been better if he got it at the back of the zone, but he got it at 6,900. You know, and if he got up here, great. You know, the quad allows him, right, that option that if we do get up there, and you know, these were all signs that because we have resistance up here. I mean, anytime we came up here, we talked about yesterday. This was the main target. Uh, Anytime you see me go half off, if you're not as conservative as me, just know that second target is really could be your half off point. So I even, you know, we said, hey, the main target would be this key swing, because really what's happening is that we've had this intermediate term downtrend, multiple days down, and now what will happen probably is we are just going to, you know, we're going to consolidate in a range before we resolve here. Now, the longer this goes sideways, the greater the odds that we do break out. But I never really kind of get a big picture look on this time frame. The 15 and the 16 is what we execute on. I want to go on the daily, and if anyone has that daily call sheet, I could just go through it as a template. If anyone can actually, I could kind of just do it in my mind. But if anyone has it, you know, I could go through it. Say, hey, so you know, basically, if you were doing that daily call on the daily, and the reason why we bought, I gave this signal for him to buy yesterday at that zone because he was super itching anyway, was because I said, well, I am going to be sideways up tomorrow. Like, how did I already know that? Even though the market had maybe I don't know, 4 to 5 hours left, because it was mostly already closed, right? Because I'm doing that daily call in my mind anyway. Basically, I'm only really because we're in this very simple. It's just so simple, right? And just because I'm in this lower quadrant, I'm looking for longs on good trade location, with the understanding that because of how we got down here on this time frame, which lasted from the beginning of June, right? This has been bearish. This is called the intermediate time frame, which is like 2 to 3 to 4 weeks, could be 2 to 3 weeks, like this. And this time frame that I'm looking at here technically is the big picture one, right? But I always say the big picture one's bullish because I zoom out. And technically, there's infinite time frames, but we have to just have a few time frames that we look at so we can have like a factor in a computer code that we could just like put an edge on, right? So yeah, I mean, mostly looking to go long because we were one leg down. This is also on your sheet called leg count. When you have one leg down, not, you know, we're not going up, right? We're going one leg down, two leg down, three leg down, four leg down. With the fourth leg or the fifth would be even better, but the fourth is really good too. And the fourth candlestick leg has the biggest candlestick. That's the sign of exhaustion, because you want that candlestick to be at the beginning of a trend, not the end of it. You don't want it to be on the fourth or fifth leg at the bottom of a 3-month balance, where the last time we were there, buyers quickly bought it up with the 200 moving average creeping up nicely, and you know, some divergences happening here. Hang on one second. Let me grab my dog one sec. Oh, okay, good. They're getting along good here. So let me actually get rid of that. It's just too much. I haven't even really been looking at it. Just basic, you know, those templates and those basic principles in play here. You know, obviously when we got up here, right? Now the long guys are taking profits and just doing nothing. And the guys that can move money onto the futures are actually going to be fading double tops, right? And if you don't like looking at this, one day Ross was like, yo, just go here and invert this. Boom. And wouldn't you want to buy there? It's just support again, right? If you're having trouble visually doing the opposite. And from an so the other question, you said, well, how did you know, Matt, if it came up here, it wasn't just going to be the biggest breakout of all time? We don't know. Like, once again, there's this thing called accuracy-based thinking, or expectancy-based thinking. And the really difference is basically the difference. Really, what we're trying to mimic is how these professional gamblers play poker or whatever, you know. And Daisy Duke's one of them, whatever is a great quote, but they just don't think about they think about like 100 games. They're not thinking about, oh, I hope this, you know, I hope this one hand wins. So if it did break out, great, my bags go up. I'm going to make more money than my small short loses a max 2% on one trade idea, right? That's our rule. So it's not so much the system is all of these rules in place. It just, can you as a human being really follow them? That's the hardest part, because everyone's got their own habits, their own this and on that. You know, I mean, there's one guy in our the PPT guy that's basically saying, hey, he takes his 90 trades a day. I mean, guys, there's not 90 trades in a month, right? I mean, 90 trades a day. Come on. So he's also, you have to be really honest with yourself and look at, these are the mistakes I'm doing. Why am I repeating these patterns? Why do I get on a winning streak, take my money out, and instead of not taking it out into the real world and buying a nicer car and helping out, whatever, and having more flow, I actually just fucking buy more crypto. That's something I always do. I'm just like a crypto junkie with digital blah, 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 hoping for a blah, 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 because I like that part of it too. I've seen 10, 20, 30x, whatever, but I like to do it really with hip pocketing runners, and you can't do it with everything or you're going to blow everything. So, but, you know, this guy said, hey, that's my caveat. So his caveat is, I take 90 trades a day. I'm getting closer, man. This is the $50,000 account I've blown. Like, that's not getting closer, man. You know what I mean? Like, you can't take 90 trades a day. So I can't really, you have to make someone come to that self-realization, or they're just going to be completely delusional. So that's the hardest part about some of these principles that I'm showing you. Like, you know, this back and forth is just a super trading range. And anytime it comes to the low range extremes, we're buying down here. And anytime it comes to the high range extremes, we're shorting or exiting, you know, our runners and whatnot. Now, I'm also exiting on smaller time frames on these trades for income producing trades, because I don't know how it's going to happen, if it's going to happen. I'm only, you know, basically looking at principles and imagining a future scenario. But I'm nimble in my thinking, and I don't have, you don't see this strategy, you don't have to be right to make money. Whereas most people I work with, you start to think like, is this trade going to work out? And the hardest part is, even though I've had it ingrained so much principle based that I know that, because we're human beings, you always want the trade to work out. You're always going to go into fight or flight. When I was giving him signals, it was so, you know, yeah, it's easy to take, you know, notwithstanding the fact it's not like he's blowing a lot of his own money. It's just this is a simulated account where he's preparing for something. So basically, what I'm saying is, it's so easy to follow these principles when your fight or flight isn't activated. So I enjoyed that yesterday. But let's just say you come to me like, hey, this is my first $100,000 account. Let's go. And I'm like, oof, now I'm going to start feeling it too, because I don't want you. Oh man, his first trade, he loses 2%, and now he lost $2,000 on his $100,000 account, which could happen. So that's why I was kind of like, here are the principles. You make your decision. You know, I even said, here's my rule on this zone that you want to get in on, which isn't even that great to begin with. You should, you know, get on the back if it's, you know, not great. The front if you're super aggressive. You know, he goes to the front anyway. I mean, that's his choice. And it actually ended up working out for him anyway, because we took an appropriate stop loss. So he came to me, and his problem is like, I keep getting stopped out. I keep getting stopped out. And I said, well, there is this, you know, there's theory, which you've been working on for 2 years, which is great. And then there's taking the theory, and then you have to actually go out and execute, and then it doesn't always match up, right? So he knows some things, but what they teach over at Crypto Banner is they teach like 4% stop loss, even sometimes bigger. And, you know, it's hard for me to say, hey, they're wrong. I mean, I guess those guys make a lot of money over there. They certainly came in with a huge marketing budget from a former communications background, and did their thing. But, you know, I just basically imagine how I would feel if I was trading that strategy. Even if, you know, I'm sure Sheldon is really great, but can you trade his strategy? Like, I can't trade other people's strategies. Can you trade a strategy where you lose 4% on trades, and all of a sudden, like, you know, 3 or 4 trades in a row, you're down like 15%, and it's like, you know, I don't know if I can handle that psychologically. Well, some could. I don't. You know, I think you could have a winning strat. I think that 2% rule really makes sense, because it filters out a lot of bad trades. You know, because he said, well, if I do yours, I can't get in on a lot. Like, originally, before I started, if you watched earlier in the video before I timestamped, where I just showed the entry and exits or whatever, I think he wanted to do a wide stop or something, to guarantee something. And I'm like, whoa. And I don't know if they told him that or what. I think they do a lot of scalping over there too as well. But he also said a lot of the scalpers, most people on the channel aren't making money scalping. I'm like, well, it's hard enough for guys to shadow me as an intraday day trader when I give a signal, let alone if I gave it as a scalping signal. It's like by the time you give the signal, you might even be out with these guys taking 10 to 90 trades a day. By the way, that's ridiculous. I personally feel it's ridiculous to trade like that. I think if you want to like basically breaking it down into time frames, if you just look at a day and what happens in a day, you know, on a smaller time frame, let's get rid of this. There's usually only one or two, ideal setups, if that, in a day. So you have to, and this is trying to avoid hindsight bias. Let me get rid of this box where it's like, imagine you woke up and this was for me on the East Coast at, you know, almost, less than 2 hours of midnight. But you could say, well, Matt, didn't you want to do, is this an automatic short? Yeah, I guess I could have, whatever, in hindsight, but I didn't, right? So whatever. So the idea is that I missed that trade. I'm not just going to just try to, you know, even for me, I'm thinking, well, if it's a sidewaysy type day, I'm not even looking to go short because I don't think it even has great odds for directionality. So it's not like I'm thinking, oh my God, at this moment in time, I definitely didn't want to take this double bottom. And as it came up here, I was like, yeah, it probably has a little leg down. That's like a little short, but this is not a directional down day for me. My call that I made in my mind that I didn't publish because Corby's publishing it, to handle that part on the night. He does the night, I do the AM. Is my call was on the daily call sheet that you guys get is uncertain. So I actually have to reward myself for actually following my rules, because back in the old day, if I worked with this guy, didn't risk my money to make money, and then he made money or whatever, and I gave him the signal, I would be like kicking myself. You know what I mean? Like, oh, blah, 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 blah. Now I'm like, oh, I don't care, because you have to be super relaxed. And I see a lot of myself in him because he's saying, well, what if I miss this? What if I don't get in on that? That's why I want to take this huge stop. And I'm thinking, wow. I'm like, there's always another, because I've been there. That energy is, I hate, FOMO is the worst energy, I gotta say. When you miss moves and you're pissed, I think that's probably at least for me, I hate that more than losing, really. If you can master that one, and I just could see a lot of that. He just didn't have that patience. It's like, I'm like, even if you did miss this and it rocketed up, there's always going to be tomorrow. There's always going to be something low, so you don't just ape in. So yeah, so I said, hey, this is the first, if you look in the channel, I said, this is something at initial support, but I'm still going to sideline. I think it was it here. And then we started working together, and then he ended up taking it, and hopefully it ended up working out for him. But it is what it is. I mean, are you going to Jones over missing a little move like this? I mean, if you zoom out, this is a little blip in time, but these moves add up. If you have a $50,000 account, you're making 0.5%, 1%, 2%. I mean, that you can compound that. And you might be able to make in 2 or 3 days, what a weekly salary would be for an average American sometimes. So that's the other thing too, because there is always movement, because there's so many markets, I would caution against always having to see an opportunity. And, I would say the best way to do it is to find these opportunity cycles and then get aggressive. And, so if we just look at that concept in these other markets, right, they didn't necessarily match up. Like Bitcoin had to have another leg down. Whereas, for example, let's see, what were some of the ones we were talking about on the channel? Was it DOT in the channel, which was, I gave that as hey, we're making multiple double bottoms on the daily. That's like a classic reload signal for traders and investors, really, to get a nice position trade in. But the problem is, I wrote Bitcoin market snapshot, but because I didn't have the balls to write it like flat out buy like I do sometimes, because Bitcoin wasn't at its spot, and I need that synchronicity sometimes to give 100%. But I mean, if you guys read between the lines, that was, these all held up really nice. So I mean, basically, yeah, I wish if Bitcoin was not at that nice spot, but that rarely happens. But it just didn't happen to turn at the same time. But you could see some of these. Look at that pattern. This is when we talked about that, Matt, this double bottom on DOT. I don't know if we got you in on around the time, but we'll see. And what were some of the others that we did? Theta. Let's see here. URST. Apparently, Israel was on our Twitter. He does some marketing for us. He's like, yeah, that signal you gave for Lido, he posted it on Twitter, and the Lido community was blah blah blah, was da 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 da. He's like, you got to start going to these other channels and posting, getting folks excited. Maybe we'll get some new folks over. So, but yeah, I mean, a lot of these were so. I mean, a lot of these were just at nicer positions, right? Even Sui here, which didn't have that follow through, right? There's that, right? It was penetrating into this zone, right, where this launched up. But let's just say you missed that, knowing that there's always going to be a retest, or with patience, right? Because missing this, you wouldn't necessarily want to buy at the top of this on the first test, because that's not the double bottom that we wait for. Even though if it did go up, you'd probably hate me for it. But I'm like, hey, sorry, I just have to follow the principle, right? Now, a DCA guy said, I don't care, it's close enough. Well, that's a different story. If you say, hey, I'm an investor, I just want a position. But even still, I would say, wouldn't you want me to get you in on a position that you think would have the best odds for a bounce, or would you rather like sit through pain for a while? I'm not saying that our patterns have 100% hit rate, because no one's does, and anything can happen. But I think they have better odds than just randomness and aping into stuff. So, right? I mean, a lot of these were looking better at the time. Yeah, I mean, the last time we got in on this on the channel, we had this one just rockets in, but don't bet a lot on it. I mean, they could rug pull it. I mean, it's an Indonesian thing. I don't know much about it. Government thing, involvement. KuCoin. But yeah, so this pattern was basically the Bitcoin pattern. It still needed that ugly, we call this a dynamic or inverse dynamic double bottom. It's like if you just like put a double bottom there, and you would have got stopped out, but just knowing the overshoot. So there's a lot of things to this, but one of the things on that daily call that we talk about is the beauty principle, which is, if it doesn't line up with some type of beauty, like a painter in harmony, like, best of all, probably to skip it, right? And another way to talk about the beauty principle is how price behaves around, for example, a key level, or in this case, it would be like a 200 moving average, right? So one astute observation to note is that it doesn't necessarily have to touch it to actually act as support or resistance. It could be just like, well, look, like if we just drew a line from here and drew a line from here and drew a line from here, they're actually not that far off. So what I was thinking is that, the fact that this actually got closer, and this is what we were talking about yesterday, and there was that, some evidence that buyers were stepping in with this buying tail. Now, this wasn't any type of engulfing pattern. We didn't get more than 50%, but that is a buying tail. So when you have a quick wick up like that, that means that even though the sellers got it down here, the buyer said, hey, we like this level, we're going to defend it, right? That's like almost from your candlestick category, that in the next day would be sideways up for that category, right? And as I'm talking about these different concepts, just know I would add them up in my mind and get like but your sheet actually, you could actually add them up and it will tell you what to do. Here's another one where we got down to this level, right? You got the buying tail, right? And because you didn't have as much time, right? You could have actually waited for a confirmation day. So if you waited for this is like a pause day, which is slightly more than a doji, but like a hammer. This is another pattern where if you just had this much information, you have to imagine that there's nothing to the right of it. So let me get rid of this. Get rid of that. Get rid of that. Because remember, we're in this giant month fractal and trading range where we go into the range lows, we're buying. Once we get that pause day, the next day we're sideways up 100%. Now, that's what we talk about for waiting for those pattern confirmations. But I also teach this other concept, which is like we don't wait for confirmation, right? We fade on weakness for the longs and we fade on strength for the shorts. For example, that's when I gave the exit for Jay in the channel, because even though he wasn't shorting, right, he still needed to exit his long to reduce risk there, because that was a place where sellers were going to step in. So what I mean by fading is that I don't necessarily have to, right, wait for this buying tail and then go sideways up the next day. That's a simpler, calmer, and I would still take that even. You can actually, and as this got, not that I would say you wouldn't want to fade against the trend, but if we went there intraday, the actual bottom building towards the end of the day happened way at the end of the day into this major zone. And if you took that on absolute, it looks like it's the most bloodiest ever. We're gonna have to go down to the lower time frame. But I'm only showing you that because it's in this major zone. And like systematically, right? We take automatic longs at those 5 rules, right? Major zones, bull bear zones, multiple time frame alignment, right? If there was a major trend the day before, the next most like fib pullback will be an automatic. Like those are all, you know, would all get us on board. So this constitutes, or we break out of a bigger picture pattern. For example, right? Let's just say we do come up here and test, and when we do break out of this is so great, guys. By the way, the longer this, I'm so glad this is going longer than if we just started to break out here. It would have been a smaller bull market, right? Because the longer this bounces in time, right, the greater the trend potential from it. Straight up principle, right? So the more mature the balance, the greater the odds for a trend. Actually, not only do we have these automatic rules when we actually fade using trade location edges, which is basically any long here is a trade location edge, but we also have all these rules about when we get in on momentum. It's not like we wake up and things are trending. Oh my God, it's like we just sit there with our heads like there's no rules to get in if it makes sense to. You don't just want to fade every momentum. There's these pre-market conditions before it opens, right? And one of them would be if we had this giant mature balance and we did break this out with conviction, we'd have a bigger picture bounce breakout. Increases odds for a trend, right? So that's when you'd have multiple time frames aligned. You'd have the short term up, intermediate term up, and the big picture up. So even if we were sideways short term, you would basically be fading every single support zone, even intraday shitty double bottoms. So when I showed you earlier that Jay wanted to take that double bottom at the top of the zone on an aggressive day, which I was thinking that was a little too much, right? But if we have, like I said before, multiple time frame alignment, bigger picture pattern, all these things that happened after we break out on a retest, then you can take any support zone, no matter how weak it is, or any double bottom pretty much. Doesn't have to be a super wide one or anything, because there's all those edges in your favor, right? And that's if we have a breakout up here. Those are those edges if we break. Now the edge down here is we don't have a breakout. In fact, the intermediate term is bearish and the short term is bearish. You went, Matt, why would you be going against on a trend down day, the intermediate term downtrend bearish? I kind of gave this in the channel a little bit. I said, if because of other things I'm looking at that I give you guys in that system that you all got when you joined, is that leg count. See, it's not just a location of an area, right? Obviously, the location is the main edge against all this downward energy, is this location down here. But it's also how we got there. 1 leg down, 2 leg down, 3 leg, 4, and then a 5th leg down. That got us exhausted into here, right? I told him on the call that if we came down here in a different fashion, for example, broke down quickly, then went sideways for a while, then broke down again a little bit and trickled, and then went sideways and rested, and then closed heavy, I would not be really excited to go long, because that's a creep down, and that could break down. But because this had 1 leg straight, 2 leg, that leg count, that's exhausted. You can go back and just see how this works. And that was a factor for a long as well. Also, you had the other category for long besides support, which you know it's the bottom of this giant trading range, is this 200 moving average. Also, it's not just any support. You could actually put a magnification of it ×2 because it's on a multi-month balance. It's not like we're looking at this data here on a 5-minute chart and you're saying, hey, Matt, I want to go long here on this pullback, and this is like an hour's worth of data. I'd be like, no, that's ridiculous. That's crazy. That might make sense if you go to a higher time frame and everything that I talk about is aligned for a trend day pre-market, but not just in a vacuum. You can never. That's the other thing that they were doing. They were telling people to take pullback continuation setups on the 1-minute chart to just practice. but not with the higher market time frame context to figure out if it made sense even to come in with that idea anyway in the first place. Because why would you take a pullback continuation, which implies a momentum directional day, like a trend day up or a trend day down with higher highs and higher lows, if your odds are sideways that day, that it's just going to go up and down, up and down? Because if it goes up and down, then we change our strategy to location based. We're going to take a good double bottom or a good double top, which a double top is when it retests again, top, double bottom when it retests the low extreme of the day on a bottom on the 15 or 60 is what I use. And right, so those are all things that worked. So when he wanted to go long here, he did have trade location edge, just not major. He had intraday trade location edge, and that was still good. If he wanted to go long here because he missed it at the top of the screen zone, he couldn't have because his trade location is so bad. He just can't get in. In fact, it was most likely probably going to go down there because it was going to go bounce up and then down because everyone who bought here is now waiting to sell at break even because they're jonesing because they lost. That's why we're getting out of resistance there, But it's also in my mind, I'm like, well, just because that day I wasn't super whatever, it doesn't overall, I'm still thinking this is going to turn. It's just a battle right now. It's not like this thing is just going to resolve itself. Notice that every time we came up here, there's these small little wicks, right? But if I just zoomed in on the 15 or 60-minute chart instead of looking at this giant daily one, then I would see these wicks and they would kind of like psych me out of how important they are because they're not that important. I'm still betting on a thesis that this is a neutral bullish turning point to the upside, that it's going to have a battle to get there. That's why we waited for him to go here, and I was actually more excited for the lower ones. But that's because as we're going up, there's going to be lots of other support zones, hidden support zones that we can see on the smaller time frame. Let me get that out. Right. If you snap that volume profile from here to here, what this red line's showing is the area that the buyers and sellers agreed, or they spent the most time transacting sideways. They basically agreed that this price was important, right? So that's definitely an area, if you came back up, that there's going to be a problem. So take your profits there, right? Now, I'm not like a guy that would say you automatically short a VWAP in the middle of a trading range, because this has been a VWAP that has, well, that would be on a smaller time frame, right? It's oscillated around it, but it is on a bigger time frame. We've moved far away enough to scratch that. If let's just say this was a 15-minute profile, if you snap it on a smaller time frame and it's oscillating around it, it doesn't give you as much information as if you do it like right now on a larger time frame, and we've moved quite a bit away from it, which we have. So that would be a problem area, right? In any area that we broke on the way down, like this top here. And of course, I'm going to keep these in. But, the whole idea of drawing the zones, right, is not so much to draw them on the daily. That's how you use your daily call that I sent you guys. The zones are just areas that you mark on a 60 or 15, that if you do see those price pattern setups that your daily call sets you at, they just increase the odds that they work out. So if you come in with like a daily call based on the system that we sent you, that, okay, today I'm sideways up, which means I'm neutral bullish, means I'm bullish in a sense that if it gets to a good trade location, I'm going to long. So what's good trade location? It would be at a support zone that you would draw, that I could show you based on some criteria. For example, zones, I list them all out, how I draw them, right? The first key reference area would just be yesterday's lows or yesterday's highs. Key swing lows, key swings highs, VPOCs, all these kinds of things. Then you draw them. And if you see a double bottom, because that's the rule for a sideways up, with the minimum criteria of 30 minutes, at, for example, your initial support, then that would be the better odds than if you had a double bottom randomly in a vacuum, not at initial support. And if you actually had a double bottom that you could see better on a 60-meter chart, which was a nice wide one instead of a little shitty one that's separated by 30 minutes, let's say it's separated by like 14 hours, or it even hits the one from the day before that's super pronounced, that's even better. because you just the more it stands out visually, the more powerful it is, and the greater the odds that it works out. And this whole game is just an odds based thing. I would have no doubt that you could teach this system, and people could pass a test, you get a PhD in it, and then if I gave them a $50,000 account, even though they know everything, when they got to pull the trigger and the money's on the line, they'll do stupid shit. Because that's the part of it that's 99% psychology. And so as I'm teaching you the system, which is the intellectual side, to program your subconscious mind, you have to actually know thyself by working on the subconscious aspects of yourself that you've been repressing, by using those trader audio tapes, right? To put these counterintuitive principles in your mind about taking small losses equal trading success, wait like a cheetah, I don't need to make money every day, I never work, I have an abundance mindset, I don't FOMO, all these things, because you know those problems are going to rise. And emotions aren't bad in and of themselves, only if they lead to bad trading behavior. But they're there. So anyone that says you have to trade without emotion, we're human beings. It's going to be there. Like if you could give me a pill where it's like that would go away and I'm just like a robot. But if the robotic aspect, if it worked only, if there was no benefit to being a human being, then why are the quant funds and the magazines that I read about aren't doing that well? And one time I interviewed for one, and they kind of admitted that they were blah 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 blah. And the reason being, and I was talking to Kobe about it, is that even though they could have a winning system, the market can change so much. Like I could program that daily call quad exit thing into an algo, which Corby actually is working on doing with someone, but it's really hard. And the guy charges 150 an hour, and he's an engineer, and it's annoying because you still a human being would have to come in and change what a daily call parameter is for the algo to do it. And visually, a human being can still see things in real time, I think, better than an algo and give you more opportunities if they know what they're doing. But that doesn't mean so for right now, his algo performs, I don't even know if he wants me talking about this, but it performs less than him. But still good enough where I was like, I would use it. Like it's good. You can sleep, put it on, and not stress out. But when you have a craft and it doesn't match up to what you really can do, it's like, Michael Jordan wants to go out and play. He doesn't want to hire a robot that shoots, 70% from the free throw line instead of 90, for example. That would piss him off. So that's that. But yeah, just to give people some hope that like all this secret algos out there that make it super easy. I don't know, not giving you as many opportunities in my opinion. So yeah, guys, I'm gonna as I the last thing I'll follow up with before I open up the floor to questions is I'm just gonna I'm gonna go through other charts and just get a market feel as an overview. But before I do that, does anyone want to talk about any trades they put on or any questions? Because this is how you can learn, and I could open up the floor at this point. So yeah, floor is yours. If anyone have any questions, you can think about. I'm going to give you guys like a minute or two, whatever, to come up with something. Any markets you want me to cover? If you don't want to talk about your trading or what what you've been doing, what your goals are.
Maybe you can talk a little bit on gold. Can we have a
Yeah.
chat on?
Yeah.
Or can you?
Yeah, what's so great? Like I don't trade gold futures, but the patterns are the same, right? And this would have been a good day to right. Wow. Okay, so gold is wow. So gold, I haven't really looked at these charts on, 'cause I only look at the things I'm looking at, but yeah, gold, this is exciting because this is a huge, bigger picture pattern, right? So gold for the last 4 years has just been going. Now, you might, this obviously these are trends, right? You say, oh, it's going up. This is a downtrend. This is an uptrend. But with, there's only two phases of the market, right? Right? Trends and balances. That's it. And if you just zoom out, this is just a bounce going up and down. And when it breaks a balance, that becomes a balance breakout pattern. And if it breaks down from one, it becomes a balance breakdown pattern. And they kid you not, they usually move before they experience. Now, there's little signs of exhaustion on the way, but they usually have a bigger retracement when they go 100% of the range they broke from on all time frames. This still amazes me to this day how well this little cloning of a box works. I've been doing it for 4 years on Fractal, even when I was posting it. Because people like to take money when they double their money, right? So anyway, this is a balanced breakout pattern. We broke from it. Now, how do you use these concepts, right? Let's just say you come to the market here and you have this balanced breakout pattern. You know about multiple time frame alignment, where the short term is the last couple days, which here would be sideways. The last couple days have been sideways. You know the intermediate term is bullish because we have 2 weeks broke out of a bounce breakout. And you know that the big picture is bullish because it's a multiple bounce breakout year pattern. So this is, if this isn't multiple time frame alignment, I don't know what is, right? You can have multiple time frame alignment when the big picture and the intermediate are up. It doesn't matter that I'm actually glad that it's sideways because, okay, so here they would all be up. This is when you would have to start trading breakouts and momentum setups because it's just here, it's okay, good, and calm down, the short term sideways. That means that I'm going to be fading every single support to get on. I'm not shorting at all now because the intermediate and the big picture are up. So I have multiple edges that I talk about on the sheet. You have time frame alignment because the big picture and the intermediate are aligned, meaning the big picture time frame is up and the intermediate is also up, right? And you also have bigger picture pattern because this is a bigger picture pattern that broke out, right? And that's enough. And then, little things on the CCI. Okay, wow, this is getting exhausted. Now we have a zero line reject. Didn't even need that. I'm going long here. You zoom in, you get in on the support, you draw your zones, 60-minute double bottom, 15-minute double bottom, and look what happened, money. Right? Now, right? When does this thing start to turn? Right on the journey there, I'm counting legs as we're going up. Now, here's the bigger target, but they usually start to, zone out on. Like, for example, you might say, well, hey, this thing came up here, but as we came up here, it's going to hit the VWAP and have a little drama. Why sit through it? So, but, right? So so then we go to the leg count category, right? Multiple leg counts up, 1, 2, 3, 4, 5, and now 6 leg counts up. This is when it starts to become sideways to even reversing, right? So if you can have a leg count on 5 to 7 legs up, and you're at 100% range where this thing is, you're at the top of this because you clone it, that's when you know it's going to reverse down and you could start exiting your longs or even going short now. You certainly should switch your bias. I'm not saying you got to trade short, but you could, and you certainly could exit your longs because now, as the larger time frame bias has been bullish here, it's now going to be, as it's coming up, it's going to look bullish, but you have to be in your mind saying, hey, the larger time frame bias is now no longer bullish. It's neutral. I'm now uncertain. I'm open to it being bearish. I can short here if I want to in a good trade location. Then when you get the bearish engulfing pattern which is a candlestick that breaks like the last few days on conviction that breaks down strong, right? That's confirming the reversal. And now you would say, hey, it's no longer neutral. I'm now bearish. My larger time frame bearish is bearish. Same thing here, right? If you zoom in on a smaller time frame and you only looked at this, then it looks really bearish. But as you zoom out and you see multiple time frames, you're gonna say, hey, my larger time frame bias now is because I'm 6 legs down into this major balance area, lows, I'm now neutral because it's not going to feel bullish here, but you have to take it, right? Because of how many leg counts were down and because of this concept called key reference areas, right? This is a major swing, right? These lows, if I draw a VPOC, right? This is like a month or two, and then we launched up with strong directional conviction. Use these terms. right? Directional conviction, launching point, because those are places that how you draw your zones. So besides this zone, right? I'm drawing this zone. I'm not just drawing this in because oh, it touched there. No, this is literally a real zone, and I'm not surprised that we got some activity and then launched from it, right? So that's the idea when you're drawing these zones, right? VPOC, right? Fine, we broke through a little bit, but then acted as support again. Broke through, then acted as support, right? Acted as support, came up, broke through, and then acted as support again. These areas and then acts as resistance when we break it. You can tell a zone is still active when it flips rolls. It came up here, acted as resistance, down again, up, and then that would be the pullback. And then, so that guys, that's really important when you draw zones to look for these areas because that's how we get in. But even as you're coming down here, you have to be open to the fact the bearishness now can become bullish because of the time frame switching. And then it adds edge, right? Because you want to be with the time frames. Now, most of the times you don't have time frame alignment because most of the time I'm neutral, meaning I'm uncertain in who's in control. Like I really wouldn't know. Like, if you broke down here and you broke down from up here, right? You're really at some point in time, you're back and forth. It's like there's real no edge. You're going back and forth here. There's no edge and bias until it gets to some type of extreme where it can shift the bias the other way. And that's usually when there's larger time frame players that can come in. The bottoms of major trading ranges, the tops of major trading ranges, key pullbacks in steep up markets, right? So okay. You know what? Let's zoom out to the weekly because then there's this other concept that we could talk about called momentum. Not sustained momentum, but this is more like a higher time frame momentum thing. It's a lagging indicator, but it kind of can confirm whether something's we're in a trend or not. But yeah, very bullish the S&P. So I'll just start with Bitcoin and then I'll go to gold. This is called the stochastic RSI. There's a slow, there's a fast, whatever, but and this is the CCI. So this will show overbought and oversold, and I have a whole sheet on that I send you guys as well. But this one really just shows, okay, is the momentum confirmed or not? So notice that really, right? Right? We said there's two states in the market, sideways and directional, right? So here is a sideways phase, right? Markets go sideways, then they go up, then they go sideways, then they can go up, and then they can go down, and they go sideways. So the up. So you always think about that, right? So as it was going sideways, right, we are fading good trade location on other things, but it's nice to know that if we were getting long here on good trade location on this double bottom, nice moving average support, notice I have that little line there from before, right? We're long and we're holding it, but now look here, right? The whole time it was bearish, the orange line was on top of the blue line, right? But now that we're long and we don't need to wait for confirmation, it's nice to see that as it's moving up, the blue line now goes over the orange line. And look, the blue line's over the orange line the entire time it's in a trend market. And when it starts to have problems, that's when it goes sideways. And when it goes down a little bit, the orange goes back over the blue, right? Notice it went back over the blue here until this week. This is a weekly chart. Each one of these candlesticks is a week. And then when the trend resumed, blue went back over orange. So it's like a trend confirmation. But if you wait for this, you're never going to get great trade location because you always have to get in when it's scary looking. I'll show you on this one. So notice it's been, we were very much blue over red. But look, if you wanted to hold through this, you got to be crazy because not only do we have double tops and that leg count thing I showed you, all the things and the CCI showing a divergence, now the orange is back over the blue. You got to be nuts to want to hold through that. Look at that. And you go all the way down quite a bit. We're talking about 20-something%. And as I was mentioning before, it's like, hey, I'm really waiting for, because I reloaded people here and me and everyone else that was in the channel. But if I waited for the blue to cross over the orange, I would have never got in. You see, orange was still over blue. If you look down with the dotted line there, when we got in on this hammer candle with the nice moving average support here. But as I was holding it, I was like, yes, blue is over orange. And I'm be honest with you, even though I was making top and that's trade location, the right thing to do would be to short and exit, and we did quad. The fact that blue was over orange, I was hoping that we were going to get a giant breakout, right? It didn't happen. We went down, and now orange is over blue again, and it kind of really whatever. But notice all this orange over blue is happening in this lower band quadrant. Lower band quadrant up, lower band quadrant up. When we had the double top in the last bull market last time, right? We were in the higher quadrant with bands crossing. And now this is at least playing out, even though it's at the same general area. We're in the lower section. So I like that for a bull. And I also like how just on an isolated level, we've had a weekly little whip tail there, and how this is a giant multi-week, multi-month trading range, multi-week, actually multi-month trading range. The last time we were here, we resolved pretty quickly. But the thing I didn't like about it is that we were clearly overdone, and here we're not. You know, so these are the kind of things we can look at. So let's apply some of those concepts to gold. Let's see how gold is looking. Yeah, see, you know, right? Very nice. Blue is over orange, confirming your trend. Very happy. You can hold your long-term position. You don't even have to, even if you're a guy that just because see, the problem is that this is a price pattern called a double top. And if I tell you to exit when it looks like this is when people call me to get in. Seriously, should I buy more Bitcoin at the all-time high? That's when you want to get out. It doesn't look like you want to get out. So even if you didn't, that's what I like about this indicator. Because if you're holding, you know, past when the orange gets over the blue and you're still holding it and you see it go down, then you really have no one to blame but yourself on top of it. It's like a double, it's like that lagging kick in the pants. I don't like it to initiate because it'll be late, and it'll be late for your exits because you need to, just like we buy on weakness, on faith, we have to exit on strength, the strongest, the biggest candlestick when it feels like, man, I'm going to hold this shit because it feels amazing. It's going to go to the moon. Hell, the pizza guy just told me he made 80 grand on Shiba Inu. What the fuck, you know? That's what happened. Everyone was talking about it last time. So yeah, you know, and as we're going down here, right, the orange now is dominating over the blue because the bears have been in control the last 1, 2, 3, 4, 5, a month and a half or so, 2 months. But now what's happened, right? As we've come down to the lower band range, we have this moving average support, right? We are in this, like we said, a balanced breakout pattern that hasn't quite moved 100%, right? I did that clone on the daily. What's happening now? Look at this. The blue is creeping up. It just started to pop out over. I love when that happens, that cross in the lower band. It really sucks when that happens up here. It doesn't matter, really. So this is actually really bullish for gold. I want Bitcoin to have that little cross yet, and it does not. To me, the pattern looks bullish, but you could still, it's still heavy momentum. For gold, similar pattern in terms of this, you know, basically we've had an up bull breakout and now we've had a flag, basically like a bull flag, a sideways ring. We're fading the lows of it. But what I like about this is that this is actually crossed very nicely. And yeah, CCI, when we made starting to get closer to this moving average, we were getting nice zero line rejects where basically this blue line couldn't get over this zero line, but the yellow line could. That means it's starting to get, it's like momentum getting, it's like basically taking a wall ball and you imagine, just imagine that you take a ball and you throw it against the wall and it bounces, smash. So that's a lot, when we say it's counterintuitive, because a lot of our trades are doing the opposite of what feels right. Like we'll buy when it looks scary, we'll sell when it looks bullish. But if you want to go into the channel, there's these things called pre-market trend things, pre-market conditions that lead to a trend where we would then switch our setups to directional setups where we take this thing called a pullback continuation or even a balance, contextually aligned balance breakout setup. And I mean, I remember when it was before December and I was like, man, Kobe's starting to buy at the high of the day. I'm like, I've never seen him do that. Like, this shit's about to break out. Like, he's basically buying at the high of the day, anticipating a bounce breakout. And he never, you know, that's just basically anticipating a breakout before a breakout happens, right? Where someone say, hey, wait for the breakout itself. The amateur will just take that setup and just start buying every breakout, looking for that, rather than saying, hey, I need these pre-market conditions that I do before the market even opens for me to trade. that will then prime me whether or not I should even be looking for that pattern on a small time frame. And that's really what the daily call does. So gold looking good. If you hold physical or not, you know, this cross, lower band, multiple ranges. This took a huge dump with the founder, but in that, there's always an opportunity, right? I mean, this is at dirt cheap levels curve. And just to go back of where we are, I mean, this thing got to $23, 29 cents. Ethereum holding up better than Bitcoin, possibly due to the ETF news and whatnot, that it hasn't really had its move yet as much as Bitcoin has. Remember before I was talking about how Ethereum was lagging Bitcoin on the weekly, was due for a bigger move. And, you know, Bitcoin has pulled back to its lower range logical level. And if this holds, then we rotate up, right? And Ethereum has held up even better, not needing to go down because the pattern's different. You know, the way Bitcoin got up here was very modest, right? So the way that it got down was rather modest. Now, Ethereum, now this is a key reference area on how you draw zones. This is a pattern called a launching point of directional conviction. It's just a super strong candlestick. And the zone would be at the bottom of it around here or anywhere, you know, generally in the general area, because the idea is that it's such a strong area that whoever bought there again is going to buy there again. And it couldn't even get down to these lows because of that candlestick. You know, Bitcoin didn't have that. And that's actually on the weekly. This is when I told folks to get into Ethereum. And that was one of the best moves I had in the last 3 months on Ethereum. But, you know, it's a little bit more quiet now. I don't know, you know, I wish it was I hate the doldrums. The summers are always like the most quiet, usually the volume, whatever. But I mean, there's always something exciting going on in crypto. That's the thing. Let's take a look at SWE on the yeah, still some time here to get in. When this thing moves, it really moves. But bottoming, it looks like to me we have a fat POC support here. Once again, we have a strong candle here. What we don't have is this cross here. And once again, that's just because you're not going to get, this isn't going to get you in. This is going to confirm once you're already in to stay in it. That it's for sure. So that it's not it's called a lagging indicator, not a leading indicator. These lead, the price patterns lead because you got to do it on faith. Because the confirmation is, oh, you got some confirmation that it happened, but technically, you know, a double bot, like, you know, if price, you could just imagine on the red, if price came down to this level, right? It's certainly not going to feel bullish, but buying here would be amazing. You're not like at the very tip or even a little bit lower, right here, because you're not waiting for confirmation, right? Waiting for confirmation would be you're scared to buy here because it might break and you're just not certain, you're not sure if it will. And then you don't buy here, you buy as it bounces up really quickly. Like imagine it bounced up here and then you wanted to buy here. Yeah, okay. Now you have the confirmation that it's going to go higher, but now look what you did. You bought it at a higher price. You have to take a wider stop. You're going to make less money. You're going to have a worse risk reward ratio because you got to take a wider stop. Whereas if you put it here, right, with great trade location, you might even be already financing practically by the time this guy can't even do anything with it. He's just going back and forth. So that's how important trade location is, and that's that whole idea of when we execute, we don't wait for confirmation. You can see that's why on the call as he was kind of waiting, I was like, "Hey, man, you in? We can't be talking forever," because I didn't want it to bounce up and then he buys here and then it goes right down. It's like timing's everything on these guys, um, on the income trades. But yeah, guys, that's the market review for the day. We went for over an hour. If you guys got any final questions, I'll rock them. But other than that, that's it. That's it for today, gentlemen. All right, gents. Thanks for coming
Thanks.
out. Oh, Ross, you had a question, brother?
No, I was just
Oh,
saying thank you.
oh yeah, yeah. Thank you very much. Yeah, and I'll remember. The George asked about copper. I'll cover that one. He gives me the ticker. Thanks for coming out, and you guys know where to find us. Take care.
Thank you.